Hello everyone. Today I am going to provide you with an overview of MCX technical crude oil outlook for the period 14th of November to 18th of November from PhillipCapital India. Prior to that, we will also give some minutes in order to review the outlook of crude oil which we have shared last week and how things have panned out, what was our view, and going forward where we are expecting crude oil to head. So for the period 28th of October to 11th of November, when crude oil was trading at around 7,213 odd levels, we have mentioned that the technical outlook for crude oil is range to positive over and above 6,500 mark with a strong resistance at around 7,800 and 8,000 zone. And as we can see here on the charts, this is a parallel channel consolidation zone where we have seen that it has witnessed a strong resistance at around 9,500 mark way back in June. And from those levels, the counter is slowly and gradually drifting down and correcting. And it has reached towards the major price support zone of 6,500 to 6,000 odd levels. At the same time, the oscillators were indicating that things are overstretched on the lower end, so a pullback is due. But at the same time, technically, previous highs at around 7,800 mark to 8,000 should have acted as a strong midterm hurdle for crude oil. So, in line with the view, we have mentioned that because the counter has entered into an oversold zone, the downside looks capped till the time it is trading over and above 6,500 mark. Buy on dip is the outlook. But at the same time, because the midterm trend is down, pull back towards 7,800 mark to 8,000 odd levels can be looked for fresh trading shorts. So a consolidation zone of 6,500 on the lower end to the resistance of 7,800 and 8,000 mark was recommended. Even if we see the write-up as on point number 3 here, we have mentioned that the bias remains range to pull back over and above 6,800, 6,500 levels with resistance at around 7,800 and major 8,500 levels, which can be looked for contra trading shorts with strict stop losses. So a broad consolidation for coming weeks between 6,800 and 8,000 with buy on dip and sell on rise was the outlook. Now we see in last 2 weeks what we have seen, how things have reacted. We see this charts. This is a weekly chart for crude oil futures, and here we can see that crude oil is trading within a broad zone since last 4 to 5 weeks with a buy on dip and sell on rise outlook. So things have panned out in line with our expectations. Even last week, crude oil made a high of around 76 levels and slipped down to the lows of 69.11 before ending the week at 7124, down minus 5.72%. So now, if we see a broader picture, then this candle which was made as on October 7, the low was around 66.46 and the high was around 76.63. So this was an engulfing bullish candle on weekly charts. This was a kind of strong pullback. And since then, in last 5 weeks, things have been within this candle only. So still going forward, we believe that initially if there is any kind of dip towards 6,500 and lower levels, it should be looked for contra trading long strategies, expecting again a move towards 7,800 to 8,000 mark. And only once crude oil gives and sustains a closing over and above 7,800, 8,000 odd levels, we can expect a next round of short covering, or you can say a pullback towards the highs of 9,000 mark. So overall, going forward, we continue to hold outlook that crude oil can continue with its consolidation zone between 6,800 and 8,000 with buy on dip and sell on rise outlook. If we see few strategies which we have initiated based on the technicals and the derivatives in last few weeks, then as on 2nd of November, we have initiated a strategy in gold which was trading at around 50,750 odd levels. And we were expecting a kind of pullback and strong move towards 52,000 and higher levels. So we have recommended a pullback bullish strategy where we have gone long on 50,000 call and we have sold 51,000 call. This was initially a conservative bullish strategy. And as we can see here on the payoff diagram, the maximum profit was over and above 51,000 mark as on closing on 24th of November, giving a profit of around 44,000 per lot. And the break even of the strategy was at around 50,560 mark. That means closing over and above 50,560, there was no loss in this strategy. And as on date, particular date on 2nd of November, the counter was trading at 50,750 odd levels. So if you see, as on 9th of November, this gold has bounced back and this strategy was giving a profit of 23,000 where we have taken partial profit. And last week, as on 11th of November, gold has further ended up giving a profit of around 38,000 per lot in this strategy. Another strategy as on 2nd of November was of natural gas, where we have initiated a kind of pullback bias strategy in the ratio of 1:2. And in this strategy, we have initiated a long call on 480 call, and we have sold 600 call in the ratio 1:2. So as per the payoff diagram here, we can see that the break even of this strategy was at around 505 odd levels, and the maximum profit was at around 600 mark, and the maximum profit was at 1,19,250 if the closing was at around 600 levels as on 23rd of November. On the flip side, the maximum loss below 480 odd levels was around 13,750 odd levels. Now, we initiated this strategy as on 2nd of November. As on 7th of November, we have witnessed a natural gas bounce back, and at that point of time, the counter was giving a profit of around 16,750 odd levels. Last week, we have seen that natural gas once again has slipped down from the highs of 590 to the lows of 476. So last week it ended almost down 8%, and that's the reason this strategy has entered into negative territory, and the PL was around minus 5750 last week. We are holding up the positions because the expiry of this strategy as on 23rd of November. Another strategy which was initiated on 2nd of November was crude oil, where we have initiated a kind of pullback bullish strategy in the ratio 1:2. We have chosen 7,200 call and we have sold 8,000 call in the ratio 1:2. As per the payoff diagram here, we can see that the break even of this strategy was at around 7,380 mark. That means closing over and above 7,380 as on 16th of November, this strategy would have given us a profit, and the maximum profit was at around 8,000 mark in the tune of 35,600 levels rupees. The maximum risk was at around 7,200 and lower levels in the tune of minus 17,000. As on 7th of November, we have seen that crude oil has bounced back from the lows, and even last week the highs was at around 76 odd levels. So we have seen this strategy in profit of 9,700. But last week, since crude oil has slipped down almost minus 5.7% from the highs and ended at around 7,124, so this strategy has entered into loss, and this strategy ended last week at minus 8,300 per lot. But because the strategy is open and valid till 16th of November, so we are still holding up the positions. So the strategies which we have initiated were, as on 17th of October, a kind of bullish strategy on gold, which is giving a profit of around 1,05,000 per lot as on 11th of November. And another strategy was again for crude oil, which was initiated on 17th of October in the ratio 1:2. So initially, this strategy has given a profit of around 40,000 also as on 7th of November. And finally, it ended last week at minus 28,400 mark. So these are few strategies which we have initiated in last few weeks. Thank you, viewers, for your precious time. If you find our content relevant, and if you want our future reports and the strategies and view, then you can contact us on the given email IDs and the contact numbers for these reports. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.